This is how I predict market turns. Well, hello everyone. This is Rick with AmazingAccuracy.com. Today is May 18th, 2021. It is currently 1:04 p.m. Chicago time. Okay, well, it's been a while since I last uploaded a video, and as I just posted a market analysis of the Canadian dollar on our F-Dates Market Timing membership, which is what you're seeing here, I thought, you know what, I'm going to go ahead and just make a video of what I wrote so that, this is something that only our members would actually normally see, as you have to be able to log in, and that means, of course, you have to be a member. But today I'm going to share it with everybody, and if you are watching this today when I made it, May 18th, great. You are notified in advance of my expectations for the Canadian dollar market, and you'll know why in a moment. If you are watching this later down the line, you can notice the timestamp of the video as well as the actual post itself, and that way you can see the validity of when I said it, and then you can see in hindsight 2020 that the market did in fact do as we anticipated it. Okay, and that's what we do. All right, so I'm already logged in, so it has my name here. Hey, Rick Retchford. Okay, so I've already logged in, and it gives me this big old schmeal, and I can, of course, log out, but I don't want to. So the first thing I do when I log in is I can go to the hub here. Now this is really the main hub, and this is where it branches off. You can go and look at the F-Date report. I'm not going to click that because the report is private, proprietary information for our members only. Over here are the cycle envelopes. I am going to pull that up in a second, but I'm going to introduce you to a couple of things here because it's a rare look inside our membership. Here's the tutorials where you're going to find PDF files on various lessons and so forth that I provide, as you can see here. And if I go too fast, you can always pause the video on your end. Over here are videos so that, again, lessons on how to use the site, what are F-Date turn dates, identifying trends, so forth and so on. And then down here is the market commentary and comments, which I just posted a commentary today, and I'm going to share that with you. Now, I do reference the cycle envelope charts in today's commentary. I normally do, so I'm going to let you see what we've got going over here in the cycle envelope charts first. When I log into the membership and I go to the hub, this is usually where I go to first. And I'll usually just run the slider, and what that does is it goes and it shows each one of these markets one after another. It just scrolls by the screen, pauses, next one goes by, you look at it, pauses, and that helps me to scan all the charts that we cover. And when it was scanning the Canadian dollar, which I can go directly there without having to scan the others, I was looking at it and I go, oh, okay, we got ourselves a potential correction here that is due based on this anticipated cycle. This is a her cycle calculation here. And this is a 90-degree turn bend here, so it goes up and then makes a 90-degree bend. That's a lot more pronounced than this other ones here. So I took notice of that and I says, I'm going to go and take a look at the Canadian dollar a little deeper. Okay, so I go back to the hub and I pull up my provisions charting software to look at the Canadian dollar, and I'm going to show you everything that I found, and I'll walk you through it. Here are the market commentary and lessons section, and this is where I will occasionally upload some commentary. It's not something I do every day, but I do it periodically. And you can see the dates like such here down here, so they're all time stamped. So if we want to go back, for example, and look and see how a weekly top for wheat, how did that actually turn out when I uploaded this information, we'll We can take a look at that in a moment. High probability gold rally, well, we'll take a look at that. I also did a video on this too, I believe. So you can always go back to my channel there, look at all the videos on my channel and find something for this date, March 14th. But I'm not going to do all these because there's a whole bunch of them here going all the way back to last April. Okay, so let's take a look at what I did today. Canadian dollar, a look at 518.21. Okay, so here I talk about that I was scanning through the cycle envelope charts and I took notice of this indication that the Hurst calculation anticipates that we could be looking at a correction in the bullish trend in the Canadian dollar futures. Okay. So I pull up my provisions charting software. These are just image clips of, my screen. So would not be my whole chart here. This is just the end part. Okay, this was updated up to yesterday. So this bar represents May 17th. That's yesterday. Okay, and this one here represents, that would be the 14th because that was Friday, and then this was Monday, and today is right here, the 18th. There is no price bar for today because I don't get end of day data until 7 o'clock or thereabouts Central Time, okay, Chicago time. So this is only updated to May 17th. I happen to know by just going online that the Canadian dollar is now up here somewhere in this really dark green zone. So let me break this all down for you here. This is the daily chart of the Canadian dollar, okay? And you can see that back here, there's 1, 2, 3, 4 trading days ago, there was a swing top that was confirmed. The high actually hit this overbought zone. Now this is a special tool in provisions charting. It is incredible in how a high percentage of the time significant turns will occur in these zones. And here we see that it kissed the zone and it pulled back and confirmed a weekly swing top for this price bar, which corresponds to this F date. The way that turn dates work is you can have a turn like a swing top or a swing bottom within one price bar of what's indicated. So obviously it was indicated here, and what I want to kind of explain to you is that as you proceed to the +1 area of the time window that we call it, the -1 to +1 is a window. It's a range that we look at for that turn to occur. Well, when you're on the -1, of course, the probability is at its weakest because there still opens 2 days following that it could possibly go higher. In this case, because prices were going up. But when that passed, and then the day right on time, which was right here, when it went a little bit higher, we can eliminate this. And now we knew that the probability was a little higher now that we were going to get a swing top. But clearly there's space between the overbought. So you would say, it hasn't gone here yet. There's high probability that it will go there first. And it has time to do that one more day within this window. And when the next day happened, then we knew that we were going to get something because we were already at the end of this window. And so it did confirm as a swing top. Now over here, if you'll notice, for example, the prior day, which was the 14th, was exceeded by the yesterday, which was the 17th. So we can eliminate this, of course. And I already know that today prices went higher, so you can eliminate the 17th, which makes the 18th very high probability to become a top because it is now at the extreme end of the available window for that F date. So while having a ±1 is really not as good as having something that is plus and minus 0. In other words, you're going to be right on the money 100%. In the real world, the deviations, the unknown factors, allows for it to be off by 1 bar. Okay, so in this case, you know, if you're not comfortable with that, you can always wait until you're on time or 1 late and ignore the minus ones, and you've already reduced your window as to the indicators, the turn indicators that you are willing to work with. Not a big deal. But in this case, you don't see the bar here because, like I said, it's not time to download today's data, but I already know it's up here. Okay, and it is the only bar now, the 18th, which is today. It is the only bar that can possibly produce a swing top like this for this indication here, this cycle turn, this F date indication. Okay, that is shown here on this provisions charting software. All right, so with that, the probability is very high that today, May 18th, we'll put in a swing top. Okay, and if you're seeing this today, you now know this in advance. If you're seeing this after May 18th, you can look back and go, wow, it did it. Cool. All right, so let's move on. So then I say up here, so pulling up the daily chart, which that's what that is, I immediately noticed that the previous DST, this stands for daily swing top. So that's what that is, a daily swing top. This is a daily chart. Each one is a trading day. So that's a daily swing top. And then before that, that one right there was a daily swing top. You can see it's the highest high before prices started making lower lows. And then if you come all the way back, well, that's it in this, what we have showing here. Okay, so we're looking at today, which is not showing here, the higher bar to be one of these tops where it will be followed by prices that will move lower, make a lower low price bar. Okay, so we notice that the previous daily swing top corrected at the OB zone. This is the overbought zone. This is the oversold zone. And that we're looking at a potential DST, daily swing top, for the current F date. This is the current F date. Okay, this applies for today, right? Right here, plus or minus 1. We're in the +1 bar area right there for this F date, which is actually May 17th F date. Today's May 18th, that's +1. And so that's the last possible place that can produce a cycle turn, a swing top in this case. Otherwise, it would invalidate this forecast, this turn date here that was calculated using cycle analysis and geometric mathematics. All right, that's where these are generated from. Okay, today's Canadian dollar prices are higher, which I mentioned. It has in fact entered this OB zone right there. Because this is the only price bar that can potentially produce a DST for the current F date, because the May 18th, 17th one could not do it because it's already been exceeded, nor the one before it. The potential or probability that today's price bar will confirm as a DST is higher. Matter of fact, it's as high as it can possibly get. Okay, because we've already eliminated the other two possibilities. All right, that moves us into the weekly chart here. This is a weekly. Each one of these price bars represents a week, a whole week from Monday to Friday, if assuming there were no holidays in there. So it says then the next step is to see how this all looks on the weekly chart. All right, that's what we're looking at. Now, if you look here on the weekly chart, the last weekly F date, because we do have these F dates for the weekly time frame as well on our report. And you can see here that right there, the -1 bar produced a weekly swing bottom. This bar low is lower than the previous bar. All right, so it moved lower from this top, came down to here to make this swing bottom, came up to here and made this pseudo swing top. And why we call it pseudo swing top is because The only way for prices to move up like this, making these higher highs, but then all of a sudden coming down here and making a lower low, that had to be a top on a lower time frame like the daily chart. On the weekly chart, it just doesn't show up because this week when it made the low, then went up and of course took out the high. So if you just looked at the chart, you would say, okay, that's not a top, that's not a top. Oh, there's a top there, oh, there's a top there, and there's a top there. But actually, if you go down one time frame, you'll see that yes, this was a top, because that's the only way for prices to have made these higher highs and then popped all the way down here to make this lower low before then continuing back up again. You always have some kind of a rotation, top, bottom, top, bottom, top, bottom, top, bottom, top, bottom. Okay, it rotates. Okay, so anyway, with that said, it happened when expected here, and we can see these red squares here. Is where I put those in so that you can see what I'm indicating. And this here was the weekly swing bottom. Prices then shot up all the way to this week. Okay, so this price bar here is updated to yesterday, which is May 17th, but it represents this whole week. So it will continue to be, it'll have a higher high because of today. Okay, but we are anticipating, because we have this other indication down here, that we can have a weekly swing top based off the high of this week. But you'll notice that I'm going to say a precaution here. So let me just go ahead and read it. It says, as we can see on the weekly chart above, the last weekly F-date produced a weekly swing bottom, that's here, prior to the big move up, and now the current weekly price bar, which represents this week, boom, right here, is now in OB territory for the weekly time frame, which is significant. And it's doing this at a time we're expecting a weekly turn. In this case, we're expecting a weekly swing top because prices were making higher highs when it entered into this time window. Okay, pretty simple, pretty simple. Okay, if prices were moving lower each bar when it entered this window, we'd be looking for a bottom. Okay, this suggests there is good probability for this week to produce a weekly swing top. Now, I say good probability because there is still the possibility that next week could go higher, right? Because you have the +1 possibility. If you go based on the daily here, I would say that the odds of that happening are extremely low because it looks like we're about ready to make that top today, okay, here, and then start pulling back. That's what it looks like. But, you know, markets do what markets do. But just want you to keep probabilities in mind. There are no certainties. We just deal with probabilities, the odds. What are the odds, okay? So anyway, we're looking at a weekly swing top highly likely to occur for this F date here, and the potential is very good that it will be this week's high, okay? And I also mentioned the caveat. I said, unlike the daily F date, the weekly F date is not at the last possible price bar within its window, so just keep that in mind. At least we know it cannot be early as that train has already passed. Yeah, the last bar can't be it. So now the odds go up even higher as we move through that window that's indicated here. Okay, so based on the F dates for Canadian dollar, both the daily and the weekly, and the tip-off that I showed with the cycle envelope chart, I am expecting that we're likely going to get a weekly swing top here. Okay, so depending on when you're actually watching this video, you can now go back and look at it if it's later. If you're getting this right as I'm uploading it today, May 18th, tomorrow, May 19th, you are getting it at a timely point where if you trade the Canadian dollar or you're in a trade in the Canadian dollar, you can do some kind of action, which I'm not even going to be touching on in this video. All right, well, thank you so much for watching. I really do appreciate it. And if you've not visited my website, amazingaccuracy.com, well, I invite you to do so. If you haven't subscribed to this channel, please click the subscribe button below. Give me a like if you like it. It just helps the channel with the YouTube algorithm. And definitely click the bell if you want these videos on a timely manner, that you want to be notified right when I upload them, because as you can see, they're very timely. Watching the video later is great. You can see, hey, how these things work and so forth. Oh, I did promise I would look at something else here, didn't I? So I apologize, but real quick, we can take a look at a couple of these. Weekly top for wheat was May 3rd. Let's see, what was that about? Okay, so yeah, we had this indication here, and it says we have a potential weekly swing top, OB territory, and then the daily chart. This is the weekly here, okay, and then the daily chart. Oh yeah, it shows that we have, here's the actual weekly high there. And then on the daily, we're over here, which is after this period. And it looks like we have a potential lower DST, which is a daily swing top. We call this a pre-confirmation sell setup. This is explained in our tutorials on what that means and how you could actually utilize what we call the guidelines to time trades. Although you can trade them any way you want, I do provide some suggestions in our guidelines. And so anyway, I'm indicating here that we have the potential to make a swing top. So of course you would sell right below the low right here. If this is in fact confirms a lower swing top as I anticipated here, I'm going to pause this video. I'm going to pull that wheat chart up and take a clip of it and show you in a second what happened with that. So to you, it'll just be a real blink of the eye, but I'm going to pause this. Okay. Now, what I've done here, it's only been like a blink to you, but I went and took a look at the weekly chart and the daily chart of wheat. And what I found, let me pull this up here. Here we go. All right. So this is elongated, by the way. You can see that everything looks more enlarged than here, but this is this. Okay, these prices going up here is this right here. This was the very top that we were looking at right there. But notice this, that we have a potential lower DST, a pre-confirmation sell setup. And as I mentioned, that if this was going to confirm as a DST, that we would be entering below the low. So that never got triggered. So that was a safe trade. In other words, no trade was initiated. Prices instead went up. If you're wondering, well, does that mean that this did not pan out? No, it did, because as you can see, it went from top and it made a bottom, and then it made a top here. So this actually made a bottom, and then the top was over here, but it didn't take out the previous top, which is cool, because over here, remember, we were expecting that week, which is this top here, we were expecting this on the weekly chart to become a weekly swing top, as stated, boom, right here. Okay, but let me bring that back up again. But what did happen here is that as prices moved back down, we had another potential lower swing top here, okay? And that was to be triggered if prices went below its low. And this is all in our documentation on what's called the guidelines. When you have a potential lower daily swing top within an F date, we say put a sell stop one tick below the low of that potential daily swing bar, and you would have sold wheat here. Okay, so what's really cool is that if you'll notice here, that's this right here, and that held as a weekly swing top, and prices moved down to confirm that, which is here, same thing, as a weekly swing top. So this article here that I posted back in March was weekly top for wheat. The highlight was not that we had a potential lower swing top here, and I stress potential, but the idea here was to let everyone know, hey, I believe that we have a weekly swing top for wheat. All right, now the next thing here, for example, is gold. I did a video on this. You can see it was March 14th is the date listed for this posting. And here I said, hey, we have a potential weekly swing dollar, weekly swing bottom for the current weekly turn date. All right, and I highlight this low right here in gold. Okay, and so I talk about oscillators and all this stuff and weekly seasonals, but you can see that it's at support based on time price squaring, which is another tool within my provisions charting software. So when I saw that and I says, okay, we're at support, we're within 1 bar of this weekly turn. Obviously nothing happened here and here, which really skyrocketed the probability because this was the last possible bar that could make a swing for this forecast right here. And so that just skyrockets the probability. And then that, of course, gives me the confidence to go out in public in advance and let you all know, hey, I'm expecting a weekly swing bottom. You can check that video out. Just go to my playlist for my channel and then look for the most recent one in March on gold, and you'll hear me saying that I'm expecting this to be a bottom in gold. So was it a bottom in gold? Yeah, I took the picture of that chart too to show you, and here it is. There's that actual bottom right here, or that low I should say, but you can see that it did in fact confirm a bottom. Then a couple of weeks later, it was pulling back, but it never pulled back below that low. It held, and then since then, prices moved up. Notice though, as it moved up week after week after week, there was this one pullback right here. It made a top. The following week, it made a weekly bottom before it moved higher. And when did that happen? Look straight down. Yes, sirree. We were expecting a weekly swing to occur during this passage here, right here. Boom, boom, boom. Okay, and now we're of course expecting another one in this time frame right here. And remember, it's going to be this bar, which is this week, and only at the latest could it be next week, which would make it the highest probability if it went that far. And we can see that we do have potential resistance coming up here based on the same time price square that I didn't remove. All right, so you can see that that prediction happened really good, as expected, in advance. Everybody was told before it actually happened. And that, folks, is how I predict market tops and bottoms. I use my F dates for the daily and the weekly time frames. I use the special tools in my provisions charting software that our premium members have free access to for as long as they are active members. And that's how I do it. And I've been doing it, wow, for several decades now. I've been making predictions of market tops and bottoms in advance with a very high accuracy rate, which is what prompted the name of my website, amazingaccuracy.com.